I know you're thinking the new tax cuts are going to help you. Let me show you the math on what's actually happening. The top 1% of Americans are getting an average tax cut of $61,090 this year. You know what the bottom 60% of Americans are getting? $500. That's not a typo. 61,000 versus 500. And by the end of this video, you'll understand exactly how this system is rigged, who's profiting from your confusion, and what you can actually do about it. Let me break down what's really happening with Trump's tax cuts, because the numbers are more disturbing than most people realize. Back in 2017, President Trump signed the Tax Cuts and Jobs Act into law. According to the Center on Budget and Policy Priorities, it was sold as a middle-class tax cut. But the law permanently slashed corporate tax rates from 35% down to 21%. Corporations got their cuts locked in forever. But for regular people, the tax cuts were temporary and set to expire at the end of 2025. Now in 2025, Republicans have extended those individual tax cuts as part of what Trump calls the One Big Beautiful Bill. And the math on who benefits is absolutely brutal. Here's the reality nobody wants you to understand. According to the Tax Policy Center, in 2025, households in the top 1% will receive an average tax cut of $61,090. That's more than the entire annual income of millions of families. Meanwhile, households in the bottom 60% get an average tax cut of just $500. The wealthy are getting tax cuts more than 150 times larger than what you're getting. Let's get more specific. According to factcheck.org's review of Joint Committee on Taxation data, if you're making under $50,000 a year, your average tax cut is $273. If you're in the middle 20% of earners making between $65,000 and $116,000, your average tax cut is about $1,030. But if you're making over $1 million a year, your average tax cut is $78,717. The people who need help the least are getting help the most. That's not an accident. That's the design. Here's what makes this even worse. According to Tax Foundation analysis reported by Kiplinger, the top 10% of earners will receive approximately 80% of all the tax breaks. CBS News found that $6 of every $10 in tax cuts will go to households earning $217,000 or more. When politicians say this is a middle-class tax cut, they are either lying or they don't understand basic arithmetic. Republicans like to point out that middle-income families will see some benefit. Technically, that's true, but the average is misleading. According to the Center for American Progress, in 2025, households in the middle quintile will receive an average reduction of $910, while those in the lowest quintile will receive just $70. $70 for the entire year. That's $1.35 per week. And here comes the double whammy. While you're getting your $500 tax cut, you're also paying more because of tariffs. The Center on Budget and Policy Priorities calculated that Trump's tariffs cost a typical middle-income household around $1,200 per year. So you save $500 on taxes but lose $1,200 to tariffs. You're $800 poorer than before. Meanwhile, the top 1% saves $61,000 and easily absorbs tariff costs. Net result? They get even richer. And here's the final hit. To pay for these tax cuts, Republicans are proposing $2 trillion in spending reductions. According to Penn Wharton budget model analysis reported by CBS News, when you factor in cuts to Medicaid and food stamps, the bottom 20% of households will see their after-tax incomes drop by $1,035 in 2026. Meanwhile, the top 0.1% will get an annual after-tax boost of about $389,000. For someone in the bottom 20%, you get $70, lose $1,200 to tariffs, lose $1,035 in benefits. Total, you're $2,165 worse off. The system isn't just rigged against you, it's actively transferring money upward. So who's winning while you're losing? The corporations. The corporate tax cuts from 2017 were permanent. According to the Center on Budget and Policy Priorities, the wealthiest 1% received a full third of the corporate tax reduction. Meanwhile, the middle quintile got just 8.2%. Corporations promised job growth and wage increases, $4,000 per household, $9,000 according to Trump's advisors. But studies showed the benefits never trickled down. Corporations kept the money, bought back stock, and paid dividends. Your wages stayed flat. 2. The estate tax loophole. According to NPR, the lifetime estate and gift tax exemption was made permanent at $15 million per individual or $30 million per married couple. If you're rich enough to die with $30 million, you pay 0 estate tax. Your kids inherit $30 million tax-free. Meanwhile, if your family owns a $300,000 home, your children might struggle to keep it because of property taxes and upkeep. Wealthy families pass down millions tax-free. Regular families pass down bills. 3. The pass-through deduction. NPR reports that pass-through business owners will continue enjoying a 20% deduction, effectively cutting the top tax rate for business income from 37% to 29.6%. If you own the right type of business, you pay less tax than an employee earning the same amount. The wealthy get a 20% deduction, you get nothing. 4. The SALT deduction game. According to Kiplinger, the state and local tax deduction cap was raised from $10,000 to $40,000 for 2025 through 2029. NPR shows this mostly helps high-income households in high-tax states earning close to $500,000 per year. If you make $50,000 and rent, this does nothing for you. 5. The politicians lying to you. Ways and means. Chairman Jason Smith claims middle-class earners will get a $1,780 tax cut. But multiple analyses show far less when you factor in tariffs and spending cuts. When he says the tax code is fairer, what he means is the wealthy pay a larger share because they make far more money. According to CBS News and YouGov, 47% of Americans believe the bill hurts the middle class, 54% believe it harms low-income people, and 60% say the wealthy benefit most. People see the truth even when politicians pretend otherwise. All right, I know this is infuriating, but here's what you need to do to protect yourself. Solution 1. Understand the math of your actual benefit. Pull up your pre-2017 tax return and compare it to your most recent one. The standard deduction did increase, but are you actually better off? Did your wages keep up with inflation? Are your expenses higher? If the answer is yes, your $500 tax cut didn't help. You're still falling behind. Solution 2. Prepare for cuts to services. Medicaid and SNAP cuts are coming. If you rely on these programs, prepare now. Build an emergency fund if possible. Even $500 protects you from emergencies. The safety net is being torn apart. Solution 3. Understand tax-advantaged accounts. Wealthy people structure their entire lives around tax efficiency. You can do this on a smaller scale. Max out employer retirement matches. Use HSAs if available. Use 529 plans. Take advantage of temporary deductions for tips, overtime, and US-assembled vehicle loan interest. These are the tools you do have access to. Solution 4. Vote in every election. This system exists because people voted for politicians who promised tax cuts and delivered them to their donors. Before voting, look up how your representatives voted on tax policies. If they supported tax cuts that overwhelmingly benefit millionaires while cutting programs you rely on, vote them out, regardless of party. Solution 5. Demand progressive taxation. According to the Center on Budget and Policy Priorities, tax cuts for households earning over $500,000 should end on schedule. Households in the 95 to 99 percentile have a median net worth of nearly $4 million. They can afford to pay more. Support candidates who will tax the rich and stop shifting burdens downward. Here's what nobody in power wants you to fully understand. According to the Congressional Budget Office, permanently extending the Trump tax cuts will cost $4 trillion over the next decade. The Center for American Progress shows these tax cuts are the main reason the debt is rising. Brookings Institution research warns debt could reach 211% of GDP by 2054 without major action. That means cuts to Social Security, Medicare, and Medicaid, or an exploding national debt, are inevitable. And the top 1% who get $61,000 in cuts each year, they won't feel a thing. Most people will hear these numbers, feel angry, and then go on with their lives. Don't be most people. Here's your action plan this week. 1. Review your tax returns and calculate your actual savings. 2. Prepare for potential cuts to benefits. 3. Register to vote and research candidates' tax positions. 4. Share these numbers with 3 people, 61,000 for them, 500 for you. Make sure people understand this math. If this video opened your eyes, comment, like, and subscribe to this channel. We're trying to reach our first 1,000 subscribers, and we need you. Every subscriber helps us expose the mathematical truth they don't want you to see. Our next video will make this one look tame, because data makes sense and it's time you kept more of yours.